And we've talked a bit about this before, but I kind of want to rehash the whole GameStop deal, right? The whole, GameStop phenomenon and, these types of things, GameStop, AMC, all those different types of companies that we had talked about before. And we talked about short squeezes and all these different types of things. Who do you think was getting squeezed in those short squeezes? By and large, hedge fund managers. And retail investors were going after hedge funds, right? They were looking at hedge funds and saying, hey, you profit off of all these individuals. You profit off of all these investors. We are going to take the opposite side of your trade and push you out of your positions and make you lose money, right? It was really a revolt of the retail investor on hedge funds. That's what was occurring with the stocks of GameStop, AMC, Bed Bath & Beyond, some of those of the like, right? These particular stocks did not warrant the upward price movement that they got from all these retail investors buying, but they got it anyway because the retail investors came in hard. The shorts had to cover, meaning all of those hedge fund managers that had bet on the stock going down had to cover their positions, and by covering their positions, they had to purchase the shares of the stock, and in purchasing the shares of the stock, rose the stock even more, right? And a lot of people have maintained their GameStop positions, right? This has gone on for some time now. But when it was going on in its most volatile way, when it was going on when GameStop was going up hundreds of dollars in price in a day, it was mania, right? It was crazy. But the retail investors were trying to push out the hedge fund managers because they see the hedge fund managers as part of the system. It was an attack on the system. It was an attack on the financial system, which is not wrong, right? Investors can do whatever they want to do. And I mean, a lot of hedge funds went crying about it to the SEC, to the federal government, to these different trading platforms who decided to shut down trading, right? And they had a lot of power. They have a lot of clout in, and around Wall Street, in and around the stock market and things of the like. And so even though they go about taking these positions and investing just like anyone else, they are not just like anyone else. And I think the public has realized that, and the public wants to keep them from being too large a part of our markets and too large a part of what goes on in the financial system, because overall, they are not extremely beneficial to individuals, right? And like I said, most individuals can't even invest in them because they require too much in the way of net worth, right? And a lot of individuals probably shouldn't invest with them because they aren't going to provide the long-term returns that those individuals need. Even though they may provide some capital preservation, they may give you some differing strategies. Again, putting a percentage, like a small percentage of a portfolio into it is probably not a horrible idea because you could get some good returns when things go bad because good hedges end up paying off. But by and large, it shouldn't be something that you just say, hey, forget mutual funds, forget these specific stocks, forget buying things that are going to go up in value over time and just sticking with those things and keeping it simple and keeping it low cost. I'm going to trust this investment manager, this portfolio manager, this hedge fund manager that is going to try to outpace everybody, that's going to try to do better than everyone else. And don't get me wrong, some of them do, but it is just so hard to determine who does, and it is so hard to even get in that place where you can effectively invest in them and have them as a proper proportion of your portfolio. So overall, we need to stay away from them. Overall, we need to understand that they aren't beneficial to the investing community. So having access to them is not that big a deal because you and me can go invest in an S&P 500 index fund for a very low cost and just ride in that. And our money will likely grow better than the money in some of the best hedge funds over the long term. So we need to be aware of that. We need to be aware that even if we want to revolt against the system, even if we want to, put a squeeze on these hedge funds, which heck, maybe they deserve it because they're doing all these things. They're dealing in all these derivatives and all these really dark spots of the financial system that have caused crises before. Maybe since they're really heavily involved in those types of securities, maybe they should be brought down to earth every now and then. But even if they're brought down to earth, we have to understand that it's not like we couldn't get better returns elsewhere anyway. It's not a zero-sum game is basically what I'm saying. It's not a zero-sum game where they can, if they make returns, then I can't. That's not the point, right? The point is that they are going to make returns that are likely going to not outpace the returns that you could make by doing something extremely simple in your investing life. Look, I think you need to understand hedge funds so you can better understand the financial system, to better understand how things work, to better understand how some of the best and brightest individuals on Wall Street end up working up through the ranks and starting their own hedge funds and doing these types of things, and some of them doing them very well. But just because it is something that is possible, just because it is touted as something that, oh, only rich people can invest in these, and only people with these high net worths and only these accredited investors can, it doesn't make it better, right? It doesn't make it something that is extremely interesting. We've talked plenty of times about how keeping fees low is such a big part of picking mutual funds, of investing in general. But if you have a hedge fund manager that is so much better than the market, that they can give you a net return on a 2 and 20 fee structure that is higher than the S&P 500 over the long term, then they are brilliant, right? Because getting a couple percent up on the S&P 500 just by itself is impressive, but doing so and then doing even more because you have to make up for the 2 and 20 structure, I mean, that's just a huge deal, and it's very, very hard to do. It's very rare that people can do it. So stick to your investing strategy. Don't worry too much about what the hedge funds are doing, but understand that they do exist and understand the part that they play in our financial system. It's very, very important, and it will help you better to understand what Wall Street does, what people on Wall Street think is appropriate to invest in, the things that they think can really move the needle in markets, and do sometimes move the needle in markets. But you can also know that you're probably doing better than a lot of high net worth individuals if you just hold the market over a long period of time, because they might try to get a little too fancy with all the hedge funds that they want to be a part of.